Hello my friends and welcome to the very final episode of this course. Congratulations for reaching this far. You've already learned the fundamentals of technical analysis and we need one final element to make our analysis even stronger, which is order flow analysis. Order flow analysis will reinforce your indicators whether we are, at the bottom or top of a market cycle, because it will tell you whether we have more long positions than short positions or the opposite. And usually it's very good to follow this because that allows to tell you whether people have capitulated or not. So this is extremely important. Let's get into this. We're going to go on Google and we're going to type coinanalyze.net. You take the first link, Coin Analyze, which is a platform for order flow analysis. Then on the main page, in this Bitcoin section here, you're going to click Show All. And after it expands, you're going to choose BTC USDT. Let me find it. So this is only BTC USD here. I'm looking for BTC USDT. There we go. You're going to click BTC USDT perp Binance. Let me find it. It should be around here. BTC USDT perp Binance. Exactly this one. All right? BTC/USDT perp Binance. That's the one you have to take. So you click on it. And then you're going to end up on this page. So this is my usual layout. I'm going to remove what we don't need. We only need the Bitcoin price here, then the long-short accounts ratio global, and the aggregated open interest. So you won't see them because you're new to this. So the way to find this is simply by going to indicators. And then first you're going to type long-short ratio and you take this one, long-short accounts ratio global. So you click on it and it will appear in your dashboard. And then for the second one, you type here aggregated open interest and you have to take this one, aggregated open interest stablecoin margin contract. So you click on it and you should have exactly the same page as me with first the Bitcoin price, then the long-short accounts ratio, and third, the aggregated open interest. So these are very good elements which will tell us whether people have capitulated or not, because remember, the bottom of the cycle happens only after the capitulation. So let me explain. First, the long-short ratio tells us the ratio between long positions versus short positions. So the top curve here in green are the long positions, and the red curve, the bottom red curve here are the short positions. They're symmetrical because it's a ratio, and the fact that the green curve is way above the red curve means that actually since a couple days, since the beginning of the fall, people have opened more long positions than short positions. For those of you who are not sure what a long position is exactly a buy position. That means when people buy. And short positions mean the positions that are short, the sell positions, when people sell. So here, the fact that the long ratio is above the short ratio, that means that people have opened more long positions. And why is this extremely important? Well, as long as we have the long positions above the red positions, that means that people are still buying the dip, right? And therefore that they have not capitulated yet. So here on TradingView, we see clearly that we are falling. We are in this bear market and we are going downwards in a downward trend. And what happens on the order flow analysis? Well, we see that the long positions are still above the short positions. So that means that people are still buying the dip. And usually when we're falling, when the Bitcoin price is falling, but people are still opening more long positions, meaning people are still buying the dip, that means that we don't have yet a full capitulation. And we will only have a capitulation when, Bitcoin is falling or, is doing horizontal, and at some point, the long positions go below the short positions. In other words, the red curve goes above the green curve. Because that's when people stop buying the dip. That's when people actually prefer to sell the Bitcoins because they believe that it will continue to go down. And that's usually a very good bottom sign, because we won't have a bottom as long as people are buying the dip. Remember this principle, very important. The market always goes opposite way of what people are doing. I'm talking about the retail investors, not the smart money. if retail investors are still buying crazily, buying the dip, opening more long positions than short positions, then the market will continue to go down. The market makers will continue to push the Bitcoin price down because that's where it will get the most money. If everybody buys, the market cannot go up, otherwise the market will lose money. So the market has to go down in order to catch the stops of the buyers and make its money. It's as simple as that. And that's why the order flow analysis is very important to reinforce our indicators whether we have a bottom of a cycle. So right now, unfortunately, at the time I'm speaking, it's June 15th. The Bitcoin is still falling, but people are still buying the dip. So probably Bitcoin will continue to fall a little bit. Not necessarily too much, but maybe it will continue to fall and do some horizontal, very boring movement for some weeks or months until people abandon, capitulate, stop opening positions, stop opening long positions to buy the dip and put their money out. Because usually, when they put their money out, they have to close their long or buy positions. So usually when that happens, well, the long positions will reduce in this ratio and the red curve, the short positions, will go above because people are selling. So you have to follow this. It's extremely important to assess whether people are still in the psychology of believing that the market can do a reversal and go back up, because usually, if they believe that, they will continue to buy. So you have to follow this. I look at it every day to assess whether we're close or not to a bottom. And the second indicator that we have is the open interest. So the open interest gives you the amount of Bitcoin in open positions. And same, usually, I'm going to increase this. Usually, when we reach a bottom of a cycle, the open interest has decreased a lot. The open interest is low. And what do we see here? We see an increasing open interest. Since April, since actually the start of the fall, the start of the fall was in November 2021. Well, let's have a look at November 2021. November 2021 is exactly here. Yeah, exactly here. So that was actually the end of November. Since the end of November, let's say December 2021, the open interest kept increasing, right? Because people are buying the dip. The Bitcoin falls, but people are still buying the dip. And so they open more positions. And so the amount of Bitcoins in open positions continue to increase. And that's definitely not a sign of capitulation. That's definitely not a sign of bottom. So as long as we see the open interest increase here, that means that people are not capitulating, and then that people will only capitulate when the open interest decreases. Because when the open interest decreases, that's when people close their positions. Because when people close their positions, that means that there are much less Bitcoins in open positions. That means that people are kind of capitulating because they're getting out of the market, they're putting their money elsewhere. And so we will only see a good indicator of a bottom of the cycle when the open interest decreases. So that's why it's very important to also follow the order flow analysis, because this will give you an extra hint or an extra indicator, an extra probability, let's say, that we have a bottom. Okay? So I really wanted to finish this with this. Now you have the three pillars of technical analysis. You also have these two elements of order flow analysis. So with these two, and with the reminder that you should always buy low, at the bottom of a cycle, which now you can identify, and sell high at the top of a cycle, which now you can also better identify it with all the indicators that I showed you, well, you will be doing much better in investing and trading. Congratulations for completing this course. You have learned the fundamentals, which now should really help you avoid making mistakes. Thank you so much for following this course. I'll be super happy to see you in another course.